Welcome back to Quant Forge. On this channel, we test trading strategies with real data, real Python code, and real backtests. No hype, no Lamborghinis. Today, we're testing the Supertrend Indicator on Bitcoin. If you've spent any time in crypto trading communities, you've seen this thing everywhere. The rules are simple. Buy when Bitcoin closes above the Supertrend line, sell when it closes below. Default settings, a TR period 10, multiplier 3. Starting capital $10,000, data from 2019 all the way through to today. No cherry picking, no convenient start date, the full Bitcoin cycle, including the crashes. First, we download the data and calculate the indicator. The super trend is built on ATR, average true range, which means it adapts to volatility. Wide markets get a wider band. Tight markets get a tighter one. In theory, that makes it smarter than a fixed moving average. In practice, we'll see. Now, let's look at the signals chart, and honestly, visually, this looks great. The indicator caught the 2021 bull run. It stepped aside during the 2022 crash. It re-entered in 2023 and rode the recovery into 2024 and 2025. 35 buy signals over 6 years, which is not a lot, but also not nothing. The entries look clean. The exits look reasonable. If you showed this chart to someone on a trading forum, they would be very excited, which is exactly why we backtest it instead of just looking at it. So let's actually read these results carefully because this is where it gets interesting. The super trend came extremely close to matching buy and hold, $8,000 difference on a $200,000 final value. Basically a rounding error, but, and this is the important part, the Sharpe ratio is actually higher, 0.98 versus 0.82. And the max drawdown is significantly better, negative 45% versus negative 76%. So the strategy didn't beat buy and hold on raw returns, but it took considerably less pain to get there. During the 2022 crash, or when Bitcoin dropped 80%, the super trend stepped aside and sat in cash. Buy and hold holders watched their portfolio collapse. Super trend holders did not. That's a genuinely meaningful result. Now, before anyone gets too excited, let me be the person who ruins the party. First problem, this is one asset, one time period. Bitcoin went from $3,000 to over $100,000 in 6 years. In that environment, almost any trend following system looks good. You're essentially testing a buy signal on one of the greatest bull markets in financial history. Run this on a sideways market, and the super trend will generate signal after signal and slowly bleed your capital with small losses. That's what trend following systems do when there's no trend. Second problem, 35 signals is a small sample. In statistics, 35 observations is not enough to draw strong conclusions. You need hundreds of trades before results become statistically meaningful. With 35 trades, you could be looking at skill, or you could be looking at luck. You genuinely cannot tell the difference yet. Third problem, the optimization. Heatmap. We tested every combination of ATR period and multiplier, and the best combination, ATR7, multiplier 3, returned 2,377%, which is 20% more than the default settings. That sounds great, until you realize we found that by looking at historical data first. In live trading, you don't get to pick the best parameters in hindsight. That 2,300% combination might completely fall apart on future data. This is called overfitting, and it is the silent killer of back-tested strategies. The default settings at 1,908% are more honest, but even those need to be treated with serious caution. So what do we actually take away from this? The super trend on Bitcoin with default settings produced returns very close to buy and hold while cutting the maximum drawdown nearly in half. That is a better result than most indicators we've tested on this channel, but it's not a trading strategy you should blindly deploy with real money. It needs out of sample testing, different assets, different time periods, and ideally a few hundred more trades before you trust the numbers. The chart looks clean, the equity curve looks reasonable, the Sharpe ratio is respectable, but Bitcoin was also in a historic bull market for most of this period. And a rising tide lifts all trend following boats. Anyway, this is what we do here on Quant Forge. We test trading ideas objectively and let the data decide what survives. See you in the next one.